In this video, you will learn how boom and crash truly works in the market. I'll be telling you how they work in the market, their characteristics, and everything about boom and crash. You'll also be learning the best boom and crash indices to trade. I'll be teaching you how to choose your boom and crash indices so you can know the best boom and crash indices to trade. And I'll be teaching you the best boom and crash trading strategy in the market for growing small and big trading accounts. So you can use this trading strategy on any account size that you wish to trade in the market. Now, let's get to it. Alright guys, so in this video I'm going to be teaching you how to trade the best boom and crash trading strategy in the market. Now, some of you are familiar with this asset on Deriv synthetic indices and is very popular among traders. When people hear about Deriv synthetic indices, the first place their mind goes to is boom and crash. That's the first thing that comes to their mind because this is one of the assets that Deriv started with when they started providing their own synthetic indices in the market. Now, this boom and crash, there are plenty. It's not just one asset in the market. We have the boom, we have the crash. But one thing is that among all the assets, whether it's boom 1000, boom 500, 900, and the rest, there is a pattern that follows this market all the time. Now, in general, when you are trading the boom and crash indices, you're going to see the market making a lot of spikes, and you can see it like here. These are the booms, and these little ones are just the retracements. Now you will see the market making a lot of spike and a lot of price candlestick movement that has 0 weeks. You will see the candlesticks moving sometimes a lot without wicks when it is retracing to give a spike. So that is very important in the market for you to understand. This boom and crash have been a mystery to a lot of traders, and everybody wants to be the first person that will milk the market. And I tell you, some people are really doing it and some are not doing it at all. Now, what is the reason? Why are some people doing it? Why are some not doing it? It's just because of the nature of the market. So boom and crash sometimes is like forex currency pairs, where you have the news, trading the news. When you are trading the news, you expect long spikes in the market, and those long spike can actually change your life for real. You can have one long spike and you are good for a whole month if you used a reasonable lot size to trade. So that is why the boom and crash are like really desired among traders, and everybody wants to trade the boom and crash. Now, currently we are on boom 1000. Let me show you what crash looks like. So here on crash, you can see that the market is different here. So we call this one the crash. Why? Because the spikes always go down in a bearish way. So you won't see much candlesticks, much bullish candlestick moving in spike. You won't even see them. Look at them. So every bullish candlestick we see here are small candlestick, and they have 0 week. A lot of them have 0 weeks in the market. You see this bullish candle, they don't have wicks, and that is why it is called crash. But each time it crashes, you see that these spikes are made up of bearish candlesticks, so it is crashing with spikes. That's what makes it crash. So when it comes down with those crashes, with those bearish crashes, you will you know that you are in a crash asset, crash crash something. So we have crash 1000. Let me show you. Let me show you the all the boom and crash we have in the market. So when you go down to your quotes here, you click on this add button. So you will see boom and crash. So I tell you guys, these are the first one of the first Deriv synthetic indices, and they have been responsible for the rising of many traders and for the downfall of many traders too. So you guys gotta be careful when you're trading this. So here we have boom 1000, we have boom 150, boom 300, boom 50, we have boom 500, boom 600, boom 900, and then we have the crashes. So here we have crash 1000 index, we have crash 150, crash 300, crash 50, 500, 600, and 900. You can trade all this boom and crash with this trading strategy that I'm going to be teaching you in this video, but I prefer you just go with the major ones. Like I have boom 1000, boom boom 500, I have crash 500, I have let's just go with that, let's just keep it at 500 and 1000. But it works on all of them, guys, so you don't have to be you don't have to be afraid when you are trading this strategy in the market. So now that we know the qualities of the crash and the boom, and you guys have seen everything that I've told you guys, I told you that the bulls, like the buyers, they don't have much power when you're in a crash synthetic indices, and the sellers have more power here. Although sometimes the buyers can keep moving the market up, like you can see here, they keep moving the market up, but they do that in fear. Let's say in fear, they move it with small candlesticks, and each time you see a crash, it's always a bearish candlestick. They move with so much volatility. So sometimes a trader can just get one of these spikes and is done for the day because he has made a lot of money from the market. Just one crash and you are done for a day. So that's how powerful these assets are, and they are very powerful. So when you go down to the boom, you see more of bullish spikes. You see the bullish spikes here, a lot of bullish spikes, and you will see the bearish candle. The bears don't have much power here, so you will see them moving in small candlesticks. So that is to tell you that they are not in their zone. So for the fact that they are not in their zone, you will not be able to see them moving in in big candles, because right here we have boom here. So boom has to be the strongest candles here. They have to be the candles with more volatility than the candlesticks of the bears. So every bearish candlestick here is just trying to survive here. They don't have much strength. They just try to survive at this point in the market. So right now we are going to understand, like, how does this strategy work? What trading strategy can we use in the market? Because I tell you guys, there are lots of traders that are trying to make money from this boom and crash. They love trading this boom and crash because they know that if they can catch some price movement on this boom and crash, they are made. And that is the truth. When you can be able to get and trade some of these movements on this asset like this, it opens your career to a whole new level. It makes you aware of everything you're doing. It gives you profit. It makes you a really profitable trader. And that is why a lot of traders are using the boom and crash and trying to trade it. But the problem I see is that a lot of them are making losses. I mean, when I say loss, I mean a lot of loss. And that is because they are using the strategies that don't work in the market. I tell you guys for free, this trading strategy that I'm about to teach you guys is this is something that a lot of traders would charge you $500, $700, $1,000 for this. But I'm about to teach you guys for free. At a point, I was telling myself, I say, why will I teach you guys this? Why will I teach this strategy for free and just upload it on YouTube when I know it is very valuable? Just like a lot of videos that I've shown you guys. But I say, let me teach you guys so that you can also be able to make money from the market. Every strategy that I teach you on this channel is not an ordinary strategy. It's more than what you know. This is the market at its pure form. The strategies that you learn on this channel, please don't take it for granted. If you want to confirm how it works, go to your charts and look for them. See the previous movement that it has made on the chart, and then you know that you are in for something big. I'm not coming here to come and whine my mouth out and tell you guys something. I'm coming here to make sure that a lot of traders become profitable, make profits, and become something useful for themselves in their family, in their life, and in other spheres of life. So, the truth about life is that if you don't have anything to give, you can't even do one of your best desires. I know that some of you guys, you want to give to the poor, you want to help your family members, but the problem is that without money, there's no way that you can do all of that. Yes, you have a good mind, but you won't be able to express it because you don't have the capacity to express it. So when you watch trading videos like this, you are investing into yourself and you are investing into your future. You are growing that capacity to be able to express your desires, express your goodwill, express your good self, that good side of you that you know that you have, but you don't have the capacity to express, maybe because of money, because of a lot of things. But the major problem is money. So pay attention to what I'm teaching you guys on this channel because they are very, very useful. Now, before we can be able to trade a trading strategy, like I always tell you guys, the first thing is to get the main movements of the market. So if you are a trader, your first goal is to know if this market is moving in an uptrend or in a downtrend. Like for example, here we are in a downtrend here. We are in a downtrend on boom indices. Yes, this strategy works either in an uptrend or in a downtrend. So we can be on boom where we know that the market is spiking up. But this strategy will help us to trade the market and will not get those big spikes that will take away our stop loss. When you are trading this strategy, there is no fear that the market will take away your stop loss. There is no fear of any sort. Like when you are trading, then you now enter a trade and you now see a spike. No, it will not happen when you're trading this strategy. That's why you should pay very good attention to it. Now, when you have a movement like this in a downtrend and the market is going down, so you know that you are in a downtrend here. Even when the market tried to move the market up here and create this thing, the market still broke that structure at this point here. So it broke the structure and it continued moving in a downtrend. So that means that we can be able to find an opportunity here. And this opportunity that I'm talking about, what is this opportunity that I love so much that I want to teach you guys to help you to become something in life? Now, this is what we call the institutional double top and double bottom. So right here, if you have been a trader for some time, you know what is a double top and you know what is a double bottom. So right here, what do we have here? All right, we have a double top because we want to sell the market. So this is a double top. And the reason why we call this the institutional double top and double bottom then is because there is a structure that it follows. Like as you see this structure here right now, this structure here with a blue box here, there are parameters that we follow to get this. We don't just come to the chart and we start drawing a line on anything, on every double top and all of that. there is a reason that we draw them on the chart, and that reason is what is going to make us either profitable or losers in the market. Now, to be able to get the right trades and the right setup for an institutional double top, the first thing is to make sure that the price movement before it, like this one here. So what I like to say is that this is the pillar. This is the pillar that supports this structure here. So this pillar here, when you are using this structure, you must make sure that there is no other bigger double top than this first one. So when you are trading here, you want to see these ones are small double tops and they won't do any good. So you want to see it this pillar strong here and tall that it will be able to support this price movement here. So for example, you have the price, this little movement here, this is different. Then you have this price move big down to the move down. So here now you see that this price movement here is bigger than what you see here. So you need a price movement that is bigger and very visible on the chart. You need something bold. You don't want the market to come and give you something small. If you trade a little setup on this asset, especially this boom and crash asset, the structure that you use, the structure that you use must be big. If not, it is not going to work. You already know that the boom and crash has a very big reputation in the market because this is one of the first indices on Deriv. So everyone knows about this. Now, let's say, for example, what I was telling you guys about the pillar. Let's call this one the pillar. Yeah, this is the pillar that will support this structure here. So this one here, you can see that the market tried to make a double bottom here. You understand? A market tried to make a double bottom here. I'm just using this as an example. The market tried to make a double bottom here, but it didn't work. Why? Because this is too small to be traded. I have seen a lot of traders who like trading small setup, and that's why they make small profits in the market. You need something bold, something that you can see clearly on the chart. You don't need to complicate anything. You just need it bold and visible on the chart. So when you have that, bold and visible structure, this double top structure on the chart, there is something that you now do. So the first thing that you do is that you draw out your box. This blue box that you can see here, I drew it out. And how did I draw it? I know that's the question in your mind. How did I draw this blue box on the chart here? Because I can't just draw it from any point in the market. Like I said, everything that we do in the market has a reason for it. And we don't just come to the market and start doing anything that we like in the market. So there's a reason for everything we do here. So right now I have a blue box. And how do I draw this blue box? So when you have your line here, let's say I have my line here because it is only when I see this movement, this this down movement, that I can be able to draw my line, my box at this my blue box here. It is only when I get a strong price movement like this that shows me that the market is up to something. That's the only time I draw my box. So you understand what I'm saying. This line here is like a demarcation. This red line here means that this is the point where I can draw my blue box. Let's say it's happening right now. I'm going to show you a setup that is happening right now on crash so that you understand what I'm saying. So let me delete this line here. So for me to get the box, to draw the box, I follow some rules. Now, what are these rules? The first thing is that you have to draw your box on the first candle, that is the top candle. before this drop here, before this drop, you have to draw your box on the top candle. And this candle, to draw it, you have to follow two rules. There are two ways you can do this. There are two ways that you can do this. So you draw your box on the wick. When you see a candlestick at the top here, make sure it's the top one, the one that is the top candlestick, not this one. This is the top one here. So you draw your wick, so you draw your box on the wick. So when you have drawn your box on that wick, you can now trade. And you want to ask, what about when the candle have no wick? Like, we see that a lot in boom and crash. So if it doesn't have a wick, you just draw it at the top there. Just draw it at the top there. What matters the most is when the price touches the box. So you need to see the price touch the box. That's the main thing. So if it has a wick, just like this one here, just draw it on the wick. You see, draw it on the wick of the candle. And if it has no wick, just draw it at the top of the candlestick. Let's say, for example, let me show you something. So, for example, let's go to crash 1000. Now we are on crash 1000, and this is what I'm telling you guys about the way this price moves. So right now, I have uh, I have the market moving down. Look at the market moving down here. Now, at this point, I know that the market can retrace to this point. Why? Because first of all, the market is moving in a downtrend. Look at the market moving in a downtrend here. So we have this line here. We have this low. We have this high. Then we have the lower high. Look at it here. The lower high. The lower low, I mean, sorry. So we have the lower low here. And then now look at, so we have the lower low here. And from there, the market started moving up. It's moving up, but it's still following the trend. So since it's following the trend, we can now draw our blue box here. Our blue box can be drawn here. And the reason why we draw this box is because the market has already shown us a bold movement. This movement here, this this movement here, this particular movement. This is the reason why we draw this blue box, because of this movement. Because we now know that the market is up to something and is going to give us a good structure and a good setup in the market. So we draw it. Now, to since I have that big price movement now, to draw it, I have to check the top candle. Which candle was the top candle here? It was this bearish candle. This one, my arrow is on top right now. So you can see that this candle does not have a wick. It has a very small wick. Look at the small wick here. Very small wick here. So tiny that you won't even notice it. Now, so you draw your box at the top of it. You draw your box on top of it. Look at it. You draw your box on top of it. So what do we do now? So now we have to exercise patience, because patience is all we need in trading. We want to see the market work out, not we reacting to the market. Now, here now we want the market to come from this point and go down, go back, go up from this point and go up to this point. So when it gets to this point, we can now look for a trade. Now, let me show you another example of this. So right here, you can see that the market is moving in an uptrend. So we have this movement here. You have the this high, we have the lower high, I mean the higher low, and then we have the higher highs here. So now the market has returned to this point. Now take a look at this previous candle before the structure. So here we have the market moving down, and you can see this is very strong, and it has small double bottom. So this kind of double bottom is too small. We cannot trade this. You know that already. Like something like this, you cannot trade this particular double bottom. So we wait for the big one, just like this one here. Look at this movement here. So if we were to draw a line, it was at this point. See this point where my blue something end. See, this is the evidence that help us to identify a good double bottom and institutional double bottom. So to trade it, we have to draw out our box. So see the way I drew my box out. Look at this place here. So here I have the candle. This is the lowest candle here, the lowest candle, and I draw my box at the wick. So this one has a wick. So look at this, the wick here, the wick of the candle. So I draw my box on that wick, and from there I can get a strong price movement on the chart. Now, the problem with boom and crash is that the candles always move in unison. They move like almost in the same shape, the same structure and everything. But how do we get our entry candle? Because the first step in the market is to understand the trend. The second is to get a structure. And the third is to get an entry candle. This is the formula for a trading strategy. You get your trend movement, you get your structure that you want to use to trade the market, and then you get an entry candle. I know some traders like to use the limit order. They set a buy limit order or a sell limit order for their trades, but I don't advise my students to do that. I make sure that we see an entry candle before we be able to take a trade in the market. So for us to get this entry candle, we need to apply some metrics to it. Now, let me show you a very tangible example. All right, so here we are on another example on Crash 1000, and I want to show you guys a few things here. So, like we always do, we first of all get a trend. You can see that this market is moving in an uptrend just by the movements here. I don't want to explain that again because I know that you guys should know that already. So we are moving in an uptrend. And now you can see that this is our pillar. It's like let me call this a pole. You know how a pole works. You have a pole, you have a flag. So this is like a pole for this our strategy. And this is our flag, this structure, this is our double bottom here. This our double bottom here is now our flag. So this is the pole that supports the flag. If you don't have a good price movement like this, with this one it won't work. There is nothing to write home about if you don't have something like this. And you can see that this price movement here was bolder, very bold than this small one here. So we cannot trade something as small as this one because it's not profitable in the market. We need something bold, something big, something that the market can respect. So now we draw a line from the wick. You can see that we have a wick here. This is the lowest point of this double bottom, the beginning. So this is the lowest point at the beginning of the double bottom. So we now draw our our box from there. This our box here was drawn from this wick here. So when the market returned to the box, there are things that happen here. So for us to get a good entry candlestick, what matters the most is the structure, the way it respect the structure. Because like I said before, a lot of these candles they move in unison there. You can see a trading candlestick, like a very working candlestick that works on other assets in the market, but on boom and crash, they won't work. Why is that so? Because the market does not respect candlestick here, it respects structure. the market respect the structure of the market here. So if you want to trade this, the first thing is to get your structure right. Please get your structure right. That is the number one. If you don't get your structure right, every other thing that you're doing is a waste of time, a complete waste of time. Now, so when you get down to this point here, you can see that we have a, a kind of candlestick. I've already highlighted it with a blue something. So this bearish candlestick and this bullish candlestick, the both of them, we have this. They will refer to it as the Marabas. The name is very funny, something like that. So the way it works on the chart is the main thing. I don't want to stress you guys with the name. So what you need is that it works as though it's some traders refer to it as the pregnant woman. And why is it so? Is because the candlestick is inside the the range of the last price of the last candlestick. This small candlestick will be inside this big candlestick. Why? How is that so? So what you see here is that you have a big candlestick here, and this is a small candlestick. It did not move below the low of the last candlestick, and it didn't move below the high. It didn't move above the high of the last candlestick, and at the same time, it did not move below the low of the last candlestick. So that's what makes it a strong candlestick. So that's what makes it a strong candlestick on the chart. So how does this work? Make sure that this bearish candle is big, because for example we have the same kind of structure at this point here, and that's why I highlighted these two candles, this bearish and this bullish candle. So right here it is the same concept. The previous candle did not move below the last candle. I mean the bullish candle did not move below the bearish candle, and the bullish candle did not also move above the bearish candle. So it's stuck inside the price movement here is stuck inside the last candle. And why is it that this one did not work and this one worked? Now there are two reasons. Number one, this one is not on a structure. This is just a free movement on the chart, a free movement on the chart. And number two is because this bullish candle is almost the same size with this bearish candle. Now, this is where it is very important, because if you don't get this one, there's no entry for you. You don't get an entry candlestick on the chart. So this candle here and the body of the candles, they are almost the same thing. So there's no much. The bullish candle does not have much respect for this bearish candle, because they are almost the same size here. But right here you can see that this bearish candle was very big, and the small one, which is this bullish candle here, was small. If you look at it, you can easily confirm that the bearish candle is bigger. It's just like a tall guy standing close to a dwarf. So when you say dwarf and a very tall guy, you can tell the difference. It's like seeing light and darkness. So you can tell the difference between the tall guy and the dwarf. So but right here it is no dwarf, there's no dwarf here. Let's just imagine there are two dwarfs. I can't but at this point on the chart. So these are two dwarfs and they have equal body, almost equal body. Let's just say one is a bit taller. So here it is very simple and clear that this bearish candle here was taller than the bullish candle. So the last point before you take a trade is to make sure that there is a previous bearish candle before this one, then before a bullish candle. So that is another quality that this one was lacking to. There was no bearish candle before this candle here. already it is not even good at all, but I'm giving you this as an example. So if you want to trade this asset in the market, you have to make sure that you have a bearish candle, two bearish candle before a bullish candle. And if you are in a downtrend, you need two bullish candle before a bearish candle. So yeah, I was still saying that I didn't even know that it is even happening here. Come on, look at this. So it is the same concept, but it didn't work. Why? The bodies were the same thing. But right here, you see that the body is not the same thing. They are different from each other. And also make sure guys that there are two bearish candle before a bullish candle. So if you have that already, you can then look for a trade that you can take. So anytime you see that bullish candle, your directional candle. What I mean by directional candle is because you want to buy, so you want a bullish candle. If you want to sell, you want a bearish candle. But right now, you want to buy. So to get this your directional candlestick, when you already have it, when you already have your directional candlestick, your bullish candlestick, then it's time to take a trade. So how do you take a trade using this strategy? The first way, the way you do it is that you place you enter a trade after seeing this bullish candle here. You see the bullish candle here. Right now I'm using the lowest lot size here, which is 0.2. Now, if I take a trade with this strategy, I'm going to be losing 1.37, let's say, with the smallest lot size, and this is my take profit target at the next high. Oh, let me get it again. So here we have trade, place our stop loss below it, some few pips below it, and then our take profit target at the next time. So this is crazy, but I just gotta say, man, this risk is very, very small, and look at the take profit target, very, very big. It's 13.81, and the risk is only 1.4. Let's say I increase the lot size now to to one, because I want to risk. Okay, let's say I'm trying to risk $20 for this trade. Okay, it's 21 now. Let me take it back to 20. Oh, 20 is too much. I mean, two. Okay, I still have my good risk. That's 14. Okay, 21. Let's say I use $21 for my risk. Let's say I'm risking $21 for this trade. I'll be making $207. My God. That is 20. I mean, that's 10 times my risk. 10 times my risk. That is 21. I mean, that is almost 10 times my risk. Because if you say 21 times 10, that is 21 times 10, that's 210. But right now I'm having 207. So I'm almost 10 times my risk. Do you know what that means? That means if I risk $10, let's say 1.5 here, 10.51, that means I'm making a $103 for one trade. You see the reason why a lot of traders like to trade boom and crash, and the reason why this strategy give you very low risk like this. And if you check well, this take profit target was hit successfully. Look at our take profit target was hit successfully. Let me show you another example of this strategy on the chart. So here we are on boom 1000, and we have the market moving in an uptrend, as you can see right here. Now, on our structure, you can see that our pole or our pillar is very strong, and it was having little lower bottom. So this one here moved bigger than all of them, and that is why we drew our box here. Now, if you look at this box here, we drew it below the candle because the candle don't have wicks. You have a very tiny wick, and we just draw it below it. You draw the box below the candle. So when we have the box below the candle, another way to trade this structure as with an entry is to, when you don't, that is when you don't see that first price movement, the one I just told you guys. So there's another way to trade it, and this one, you wait for the market to break out of the structure. When the market has broken out of the structure, allow it to make a little retracement here. Let it make a little retracement here and then come down to break this structure here. So when it's here, you can now look for an engulfing candle. And engulfing candle also works really great with this strategy. So when you have an engulfing candle here, you can enter a trade. Now, don't get yourself confused. This is very simple. So first of all, you wait for the market to break out of this blue box here. Then you wait for the market to retrace to the box. Then it now go down again. When it has gone down, then you wait for a bullish engulfing candle, which is showed here. This is a bullish engulfing candle. So when you have that on your chart already, so you can enter a trade. Let's say I was there when the bullish engulfing candle showed up. I place my trade, then place my stop loss below it. My take profit target should be at the next high, which the market took out here. The stop loss was hit successfully. Or you can just put your take profit target here if you are afraid. You understand? So some of you are afraid of trading and holding your trade for long. And I understand the fear because sometimes you can enter a trade and the trade will move good in your direction, and somehow it start going back and you lose all your trading profits, which is a very heartbreaking something for a trader. But for me, I've been trading this strategy for a very long time, so I have no fear about it. I just follow my strategy. So I just place my take profit target at the top there and see what the market will do. Now, sometimes the market can just, oh, let me draw it back again. Let me draw this back. Stop loss, stop loss here. Your take profit target at the high. Now, this is what happens sometimes. You will see the markets move to this take profit. Sometimes it just move a little bit like the way it did here. To just kiss the take profit target, but it will not hit it. So I understand if here that some traders feel when they are trading strategies. So this is a $8 risk on this trade. I mean, okay, let me bring it down a bit. So this is now a $9 risk on the trade. Let's imagine I did 0.5. So in $3 will give me $147. Let's imagine I traded with $100. Let's see, 8. No. 0. Okay, let me see, 4. Okay, that's too big, man. 3. Well, 2. 2, that's too small, 95. Okay, let me say 2.2. 2.1. Alright, so we have $100.20. So if I traded this strategy with $100, I will be making $618 for my trade. That is more than 6 times the size of my stop loss. I'm making 6 times my capital. Those are the type of trading strategies that I trade, and those are the type of trading strategies that I give in my VIP signal group. If you have not joined my VIP signal group, the link is in the description box below. And if you are new to Deriv, do sign up with Deriv broker. The link is also in Deriv in my description box below. If you have to rewatch this video, you watch it again and again so that you can be able to grasp every single knowledge in this strategy. This is the best boom and crash trading strategy ever. Any other strategy that you know, just forget it and focus on this strategy. If you want to use this strategy on the smaller time frame, like the 5 minutes time frame, you can feel free to do that. But please don't use it on the 1 minute time frame. It is not good for the 1 minute time frame. Don't trade 1 minute time frame. If you are my student, you have to stop trading 1 minute time frame. I don't like trading 1 minute time frame. Don't trade it. Use either 5 minutes or 15 minutes. I will just say 15 minutes, but some of you like to go low. So the lowest you can go is 5 minutes. Don't go below 5 minutes. Use the 15 minutes or the 5 minutes chart, and you will be good. All right, guys. I will see you guys in the next one.